Euro dollar. So the euro continues to be well bid over the past several sessions, though the market is now approaching some key internal range resistance at 114.67. At this point, the market would need to establish above 14.67 to take the more medium-term pressure off the downside. Until then, the pressure remains on the downside, and a lower top is sought out in favor of a bearish resumption, eventually back down towards some key support at 110.87, below which exposes 108.09 further down. Sterling dollar. So cable has come back under pressure after stalling out in the 153s after the market had put in a bearish outside day formation and Tuesday price action. At this point, the focus now shifts back to the downside, with the market now targeting 50.90, that support going back to May, below which exposes psychological barriers at 150. At this point, only back above Tuesday's high, which comes in at 153.88, would take the immediate pressure off the downside. Dollar yen. So dollar yen continues to show signs of a structural shift, with the market slowly rolling over and potentially heading back down towards that August low at 116.12. At this point, a lower top is sought out at 121.74, which will be confirmed on a fresh downside extension. Only back above 121.74 would put the pressure back on the top side. Euro Swiss. Euro Swiss hasn't done much in recent trade, though the market is in a recovery structure and is focused on next key upside above 110.50 and towards 112. At this point, setbacks should continue to be very well supported, with only a breakback below 107.14 to compromise the recovery outlook. Aussie dollar. So Aussie dollar gains have stalled out after the market put in 9 consecutive positive closes and 9 consecutive higher lows, with the market reversing on Tuesday sharply and putting the pressure back on the downside for a retest, potentially back down towards those multi-year lows just above 69. At this point, only back above 74.40, some medium-term resistance, would compromise the overall downtrend here, and the market again is focused on a resumption of declines and a bearish continuation. Dollar CAD. So dollar CAD has seen a nice setback off those 11-year highs at 134.57, but the market looks to finally be settling into some support ahead of some key medium-term support at 128.60. At this point, look for the market to carve out a higher low or a base in favor of a bullish resumption, eventually back above 34.57. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, and although we've seen an impressive recovery rally in recent trade, the market remains well capped into the 67s and is looking for a bearish resumption after putting in a reversal day on Tuesday. Look for deeper setbacks ahead to take the market back down towards recent multi-year lows in the 61s. SPX 500. So the S&P 500 continues to show signs of a potential structural shift here, with the market breaking down in August and since consolidating. Look for a lower top to carve out somewhere above just over 2000 in the 2020 area, ahead of the next downside extension back down towards those recent August lows at 1833. Ultimately, any rally should be very well capped ahead of 2050, with only a break back above that level to put the pressure back on the top side. Gold. So an impressive breakout in gold on Wednesday, with the market taking out key resistance at 1170. The break above 1170 confirms a medium-term higher low in the 1100 area, which should now expose and open the fresh upside extension towards medium-term resistance at 1233. At this point, setbacks should now be very well supported in the 1130 area, while ultimately, again, only back below 1100 would compromise the recovery outlook for the gold market.